Welcome to Urban Hood, your learning platform.
Hey team, I want to talk about option chain, what it is, and how to navigate option chain in Think or Swim. It's good. It's a tool given by TD Ameritrade. If you have an account with TD Ameritrade, you can download Think or Swim and you can navigate this option chain. So what you're looking at the top, if you see that the menu, different menu is there, but I am using trade, monitor, and trade. So let's say on the trade, uh, the Apple is the one I'm looking at. So what is option chain? Option chain is gives you a listing of an asset. In this case, asset is Apple for all available contracts, option contracts in front of you. Here you can see the gray and you can see the yellow. The yellow one typically gives you weekly short-term contract, and the gray one is a monthly contract. You see here March 19, 2021. The time I'm reading, eh, I'm using this data is March 20, so which is -1. So it just passed a day, that's why it's -1. And next 6 days, after 6 days, it's going to be contract is going to be expired, which is 26. Typically, these contracts, depending on asset you are doing option with, typically they expired on Friday. So you can see March 26, April 1st, April 9, each or most of these are Fridays date. On June 18th it's a Friday, July 16th it's another Friday, then you can see that September 21, so on. Okay, so take a look at it on March 26th. What do we see? Remember, if you are an option buyer or seller, you have to consider two things: call and put. I'm assuming you already have understanding what is call or and what is puts. If not, please look at other videos. We have many videos that you can take a look at it, or you can use that web to find out the basic knowledge about call and put. But typically, call means you're bullish. You are thinking that this stock price is going to go higher. And here you can see that each column, what you have it here, you can customize it. How do you do it? At the top, very top one, you see that option chain. You click on it, it shows you all the option chain. It shows you filter. You can filter on and off. You can do spread, single, or vertical. These are all different strategies you can use for option. And here is the layout. Layout is the one, what column and how to customize it. If you could, for my case, you can see that I have position, open interest, volume, probability, ITM is in the money, and delta. These are the columns that I wanted to keep an eye on. But if I want to say, add a little bit more percent change, I can add percent change. Or there are other things. Let's say, you are seeing the theta probability of touching. That's a good one to keep an eye on. Also, return on risk, net change, so on. Any of those column that you want to add on the left side, right side, you can add it from this menu. What I did, the layout, customize. All right, and then right below that it shows you strike all. So what that is here, if it's too many for you, you can always minimize. Let's just 10 contract. Now you can see you have, as soon as I change the strike 10, it's showing me one. If you count this here, it's the 10 strikes, and this is the strike. Apple at this time is 119. You can see very 119.99. Last Friday it closed at that price. So from 119 it shows us some of these here. You can see the gray. Some of this is in the dark. What that means, gray is usually we call it in the money. If you look at Apple 1999 when closed, which is almost like 120, it stays within the gray, within this purple area. You can see that, okay, gray, purple, or a little bit more purple, light purple color, or blue, purple. whatever color you can interpret, you can see that is visible, right? uh, 120, 119, 116. If you see as you go higher, that means this probability also you see that is in the money means higher, meaning that your chance of winning is much higher. That also means that you are paying uh, more money to stay in that contract, to purchase the contract. All right. So you see that here $4. If you'll be buying a call saying that Apple will be 117 plus more, the then if let's say Apple goes 130, you make very good money, right? All those you can consider. Also, let's say Apple goes 140, and then this person sold you a contract. That means he is obligated to sell you Apple, buy outside the market, get you Apple for 117 for each. So you are paying 117 times 100 to pretty much about $11,700 is going to be your investment, and then you will be able to get Apple regardless whatever price it is outside. If it is even Apple goes 200, you can still are paying 117, right? he you have the right to exercise the contract. Doesn't mean that you have to buy it. Those are all we cover in that other classes. So now that you understand this option chain and you understand the strike, you can see the strike. And I wanted to show you the 10, but if I want to see all the open contract this coming week, strikes, available strike contracts out there, this is how you use strike. You navigate it all, you can see it's a lot of data. Now everything gets squeezed down here, right? So the highest one we have this coming week 205, and here it tells you open interest, meaning how many contract already outstanding, and that remember probability is the one that you might want to keep an eye. What's the chance of you winning this? Less than 5%, almost like 5%. That means your 95% chance that you are not going to win. So why would you want to put your money on this? That's something you have to start doing your own due diligence and do your research before you get on any option. Although option is very lucrative, but same time if you make the wrong call, you can lose a lot of money. Remember, call means you're bullish, it can go higher, but at the same time, time is not in your favor. Now, 6 days, 12 days, 20 days, if we go, let's say, on 26th, what is the Apple 130 call this coming week? 130 call is 14 cents. But 14 cents means, pretty much you're 14 times 100, you're paying about $14 plus the fees that your broker charging you for each contract, right? Every contract or every vendor or platform that broker are going to charge you different fee, but for Thinkorswim typically they charge 65 cents for each contract. Okay, so let's say here $14 you're paying plus 65, that's about $15 you're going to pay for one contract here for. But now let's go to this monthly one. This is gray. You have the time is left 62 days ahead. You are saying Apple May 21st. What's Apple 130 price cost? Look at 130 is $3.40. So you can see $3.40 versus about $15. Now 340 times 100, which is $340 plus 65 cents. So let's say $341 you're going to pay, and knowing that you have 62 days, remember the peace of mind, 62 days, but still it's a good deal. If I or you, I would consider knowing that, hey, that I have a higher chance to win, and look at that, the probability of winning that this is 26%. Still, it's not as good as what we saw earlier one, but better than that, right? 26. And those who wants to be little bit more, that risk, that you do want to cut reduce more risk, you can always look for probability 60%, 80%, 90%. Those you see, as you go higher, you pay more money. Else, plus also knowing that you have time in your side. That's if you consider buying option. But on the right side, you see the put is the other way. If you think that Apple is going to keep going down, everything inverse. So meaning, if let's say if we see that Apple 130 is $13, but remember in in put means if it price goes down, you're going to make money, right? So now if you go look at it in Apple, Apple has to Apple, if you buy, if you're a buyer of this put, and Apple went down to let's say 120, so this price is you are going to be able to make money knowing that, okay, now that Apple is, you say it's a seller, but if you'd be buyer, you see that it'd be the other way. All right, you're going to keep making money. But anyway, that's all. That concept you can learn it on the other videos. Now that we understand how to read this option change, and the volume, and this also looking at what's the highest contract. If you look at Apple on March 17, 2023. So that's the last contract available contract for you to buy, and the last price, the highest price Apple is 210. But look at that open interest, this many share contract already out, and the volume not bad. It's like there are very good amount of volume already went last week. So which is also good that the people feel like Apple is more bullish, it's going to go. So and then the price of this $6.05. So you do the math. You are buying around $600, $700, and just sit there, wait for about almost 2 years. Apple is going to turn around, right? So this is how you are able to read option contract. Remember, option chain tells you what contracts are available in front of you for a single asset and how to navigate that. Yellow means is short term weekly, and gray, this is like long term monthly, and how do you navigate the last one so the time is in your side if you are an option buyer. And on the right side also you see that implied volatility, it also gives you some um, volatility to understand, hey, why is this, what's going. Look at that, this one, implied volatility is plus minus 50%, which is still is a good. You see that on 2023 January, implied volatility is plus. So you might want to stay close to where you have a higher number, higher chance of winning also. All right, and then the other thing, what I want to tell you, that when you can look at the volume, open interest, you want to stay close to a higher number. That means more people thinking this might go touch this number, and the liquidity and also the volume of purchasing also is good. So when you're trying to sell this option at any moment, it will be easier for you. All right, and then if you look for any asset and there is buy bid and ask, you see that there is very little. Bid and ask is here. So bid ask is 71.15, bid is 70. It's very close to each other. But if you some asset, you might see there is $2, $3, $4 difference, and the volume and open interest is very low. That means liquidity of that option is not good. So if you want to get out of that the call or put, you will have a hard time to sell it. So it's always good to look at open interest, the volume, and that implied volatility, that what we mentioned. All right. Hopefully this is helpful for you guys. Thank you for watching. I will see you in our future video.
Thanks for watching. Visit our website, urbanhood.org, and join our community at meetup.com and look for financial freedom for you. Thank you, and we hope to